Welcome to Trading Analysis, Module 2. In Module 1, we focused on the mindset side of trading. We talked about probabilities, decision-making, psychology, behavioral traps, and how professional traders think. Now it's time to start reading the market itself. And we're beginning with one of the most misunderstood concepts in trading, price action. The funny thing is, almost every trader says they use price action. But ask 10 traders what price action actually is, and you'll probably get 12 different answers. So let's clear that up. The biggest price action myth. When most beginners hear price action, they immediately think candlestick patterns, engulfing candles, pin bars, doji candles, hammer candles, dragon candles, wizard candles, whatever candle YouTube is selling this week. And while candlesticks are part of price action, they are not price action itself. That's like saying a steering wheel is a car. It's part of the picture, but it's not the whole thing. So what is price action? At its simplest level, price action is the study of how price moves. That's it. Nothing magical, nothing complicated. Price moving up, price moving down, price moving sideways, and your job as a trader is to understand what that movement is telling you. Because every candle represents a battle between buyers and sellers, and every movement in the market is the result of one side temporarily gaining control. The only two participants that matter. One thing that helped me understand markets was realizing something simple. There are only two participants that matter, buyers and sellers. That's it. Not indicators, not influencers, not social media experts, buyers and sellers. If buyers are more aggressive than sellers, price moves up. If sellers are more aggressive than buyers, price moves down. Price action is simply the visual footprint of that battle. You're looking at the evidence after it happened. Why most traders struggle. Most traders try to predict every move. They stare at charts asking, where will price go next? Professional traders ask a different question. What is price telling me right now? That small shift changes everything. Because price action isn't about fortune telling, it's about observation. You're not trying to predict the future. You're trying to understand what buyers and sellers are doing in the present. And the better you understand that battle, the better your decisions become. Supply, demand, and imbalance. Think about a store selling water bottles. If everyone suddenly wants water and there are only a few bottles left, the price goes up. If nobody wants the water and shelves are overflowing, the price goes down. Markets work the same way. When demand overwhelms supply, price rises. When supply overwhelms demand, price falls. Price action is simply the visual record of that imbalance happening in real time. Why this matters? Because every trading strategy eventually comes back to price action. Smart money concepts, support and resistance, volume analysis, trend trading, breakouts. All of them are simply different ways of interpreting the behavior of buyers and sellers. If you don't understand price action, everything else becomes harder. But once you do, the market starts making a lot more sense. Key takeaway. If there's one thing I want you to remember from this lesson, it's this. Price action is not a candlestick pattern. It's not an indicator, and it's not a strategy. Price action is the study of how buyers and sellers interact through price movement. Learn to read that interaction, and you'll begin seeing the market very differently. Now that you understand what price action actually is, the next question becomes, what state is the market currently in? Because markets don't move the same way all the time. Sometimes they trend, sometimes they range, and sometimes they transition between the two. In the next lesson, we'll explore trends, ranges, and the three states, and learn how recognizing the market's current condition can completely change the way you trade. I'll see you in the next lesson.
Goodbye.